to the WARR Hunt quarterly market update for 30 September 2022. If we reflect back over this quarter, it's been a pretty volatile time, Steve. The themes we talked about last quarter were Ukraine, inflation and interest rates, and that seems to have been pretty much the theme for this quarter. So with those three things in mind, how's that panned out for the Australian market?
Yeah, Sam, I guess it's not only the theme for the quarter, it's the theme for this year. It's all about inflation, the consequence of that, of course, are rising rates, and the Ukraine conflict doesn't help inflation. It's been very much an up and down sort of year, Sam. It's an up and down quarter. It might surprise people to know that the quarter's actually positive for the Australian market. It's small, 0.4% positive return. And all the news you're hearing about lately has actually just come in the last 2 weeks. What's been happening ever since June is the market's been going up and up and up, sort of on the expectations that inflation is moderating and things will be okay. And then about 2 weeks ago, the chairman of the Federal Reserve said, no, we're going to do whatever it takes to kill inflation. And it may have taken 9 months, but the market have now got the message that, the Feds are serious, and so the market's in a downward decline. So overall, Sam, for the last 12 months, the Australian market's down about 8.9%.
What's sort of happening more broadly? So if we look at Australia, what's happening sort of globally in terms of the markets?
Yeah. Well, the general movement's the same, sort of up and down, and down very much so in the last couple of weeks. But you'll see Australia's actually doing relatively better on the 12-month returns than, say, the developed markets and the emerging markets.
Why is that?
Well, in the developed markets, about 65% of the developed markets is in the United States, and they're doing one of the worst performing markets, and they've got a big exposure to IT stocks, which are down around 30%, Sam. That's what they call a serious bear market. And when we look at the emerging markets, about 30% of the emerging markets is in China, and that's had a slowing economy for more than 12 months. Both property development is off, and they've had a zero COVID policy.
Yes, well, there's continual lockdowns, basically.
Continuous lockdowns. It's really shut down the economy. So China's really dragged down the emerging market returns.
The thing that seems to be on everyone's lips is interest rates and the impact that's had on the bond market. So what's happened both domestically and internationally around the bond market?
Yeah, so when inflation's there, central banks only have one tool to combat inflation, and that's by raising interest rates, and the bond market is a reflection of that. So what we've seen in the whole year, as you can see in this chart here, is yields going up and up and up. They've also had a little bit of up and down, but essentially you can draw a straight line over the course of the year where yields have gone up. And Sam, when bond yields go up, bond prices go down. So you can see that both the Australian bond market has got a return of about minus 10%, and even worse in the global bond market, that's down about 13%.
So to put that in context, Steve, that's probably the worst performance for bond markets, both globally and domestically, ever. It's not a calendar year return, but it is a year-to-date return for those returns. So we now might sort of focus on the factors that we look at with WARR Hunt with clients' portfolios. A big part of it really is skewing our clients' portfolios to equities, and that's both domestically and internationally. And within those portfolios, really weighting towards those known factors or known premiums. So tilting portfolios towards the small factor and the value factor. How have those sort of factors panned out both in Australia and internationally over the last 12 months?
Yeah, Sam, well, there's actually been an enormous value factor over the last 12 months. So these value stocks or relatively low price stocks have done way better than relatively high price stocks. And think of sort of IT stocks when you think of growth stocks. So a very large value premium, which has really helped clients' portfolios. Now, on the other hand, the small cap premium has been negative, and that's not unusual in times of market stress at small caps.
Yes, we've definitely seen that before. This sort of volatility that we're seeing at the moment is not actually that unusual. In terms of these sort of like market corrections or gyrations, they are as common as dirt, but they are fairly uncomfortable. And I think this chart that you're bringing up now really illustrates the fact that there's been a number of these gyrations over periods of time. I think the important point really here to stress, and if we look at the WARR Hunt philosophy, there's key 5 components to it, but probably the last one there, really about staying disciplined, is the most important. That We don't know when these types of corrections will happen, but we do anticipate that they will happen over the an investment journey. And the most important thing is really staying disciplined to the plan. If there's things that have changed in your life, then that's a time to make a change to the plan, not the gyrations of the market.
Yeah, that's absolutely right, Sam. It sometimes doesn't feel this way, but the market goes up in the long run, and you've just got to stay disciplined to enjoy those returns.
Terrific. Well, thank you for joining, and we look forward to catching up with you again soon.
Thanks.